Joel Hawthorne of the Morning Snapshot joins us now, and what a week already, Joel.
Absolutely.
All right, so here we are on a Tuesday. Everybody's thinking, what do you do? So as a pro trader, when you see just insanity happening in a market, what do you do?
For me, a couple things. If I don't have kind of a base or a foundation to a trade that I like, I completely step away and do nothing.
Good advice there.
Yeah, I think that a lot of times you can get caught in that knee-jerk reaction or the headlines of kind of market volatility if you don't really have any strong foundational idea of a trade that you like that kind of matches your financial risk tolerance, especially for myself. I completely step away and do absolutely nothing. I can't lose what I don't risk.
So right now, what would you be maybe thinking about buying? Some people say you have to be buying when everybody's crying. Anything out there you like?
I like that, Angie. I really do like a little bit of a bounce here. I do believe that overall the market is still driven by a lot of the headlines we've seen, but I do think we'll get a strong bounce and kind of head back to the upside. So I'm looking for cheap opportunities to get long, while also looking for insurance plays and things like alternatives like gold, using the ETFs like GLD to kind of play the opposite side if that bounce takes a little bit long time to kind of happen.
Let's check out your trade, starting with SPY, which tracks what's going on in the larger S&P 500. So SPY, more of an ETF, so a smaller bite of the S&P 500.
Absolutely. This trade is kind of broken up into two ways for me. I'm looking at just looking straight out to calls. I'm buying some weekly calls that expire Friday here in a couple days. I'm also buying some calls that don't expire for about 39 days out until about April. The reason why I'm buying these calls here is for a couple reasons. The weekly calls that expire this Friday, I'm looking for that immediate surge. They're going to be cheaper. They're priced out at about $3.79 or so for me, so I can really load up on those. The ones that expire actually out until April, those are priced out at about $8.80 or so. So those are a little bit more expensive. I didn't want to spread the trade out because I don't want to kind of put a ceiling on my gains.
Okay.
But those calls are very attractive. So in the event that bounce doesn't happen by Friday, maybe I take a little heat on those losses, but I have until April for the other calls to work out for me.
And then with GLD?
GLD is a spread trade. I can look at the 157s by 160 halves, and that trade will cost me about $1. And I can put that trade on out for about 20 days or so, March 20th or so, I'm thinking about.
Okay, and big warning here. Joel's a very sophisticated trader, so not everybody's going to be able to do what you do, of course. But
absolutely.
At least you know what he has going on. And I like your advice at the beginning. Sometimes you just have to hands off.
Yeah, when it's too volatile, it's a lot of risk. If you don't know what to do, the best thing to do is do nothing, in my opinion. And even for me, when I don't know what to do, I do nothing.
Hey, Mom always says, when in doubt, don't.
Absolutely.
Thank you.
Thanks for having me, Angie.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.